Welcome to Markets Now. I'm Michelle Roque with Vince Boddicker, a farmers trading company, and we have red on the board in most of the grain and livestock futures complex this morning. Vince, thanks for being with us this morning. Let's talk about the grains in general. We have been in correction mode, 3 days down. Today would be number 4. Is that just tied to some of this outside market influence, including the dollar, or is there more to it?
I think those are short-term are the influencing factors, and then I think you really add whether it be corn or beans. There are not really any fundamental factors to make you want to go higher. Yes, on Friday when we had our S&D report, we got reduced yields on corn and beans more than the trade was expecting, which is supportive, but we're nowhere close to running out of beans or corn. In here in South America, no threatening weather in Brazil. Not helpful in here if we want to go higher, but I think you're going to be in a sideways market for a while, and you just got to take it from that point and see what may come about and see if there's any other surprises along the way.
Yeah, especially when you don't have a lot of news. So we go up, we test the upper levels of these trading ranges, we hit resistance, and we can't take it out. And so that was part of the problem too, wasn't it?
I definitely think it was. You had the great news on Friday, and you ran up and you really didn't close very good and look good. And then Sunday night on the bean side anyway, you really came back and looked well. But once you got to the morning session, here we go again. There was some sellers there. And when you didn't take out Friday's high early, I think they just piled in and said, let's go from that point. It's going to be interesting to see the commitment of traders report on Friday to see what those funds are doing. Are they starting to come back in the short positions? Last week on the corn side of things, we were actually net long. Will they turn around and go short again? Those are the things I think that'll be important and maybe make some influences, but you've got adequate supplies and no threatening position. So right now it's going to be more technical, I think, and whatever news happens to hit us for the day.
Yeah, if there's one fundamental that maybe pushed the corn or the funds to go long in the corn, it might have been demand, but we've been having good demand. Even yesterday, we had all the flash export business and we couldn't get the market to rally. And so that's a bit discouraging, isn't it?
It is, but we look at this thing as a whole. I think that exports are supporting the corn, but on a daily basis, do you get any big reactions out of it? No, I think it's more a muted effect, which I think is okay. It's in the back door, and the corn demand this last 8 or 10 months looks so much better than it did the previous 2 or 3 years that now we just got to see where we shake it. I believe if corn is going to make any decent moves, it probably does not happen until February or March, getting closer to spring in this country. And do we have any problems or think we might have problems with safrinha corn in Brazil? Or what does the moisture situation look like in the U.S. come into spring? Right now, I'm going to say it's going to look a lot better than it did a month ago, but maybe we change by spring again.
Yeah. Well, if you've got all this demand coming at the market and you can't get above these highs, like I said, that is discouraging right now. What about the soybean market? A couple of things we should talk about there. Bean oil has had a huge correction. Bean oil is up a little this morning, but it has had a huge correction, and soybean meal has continued to hit new contract lows. So that has not helped that market either, has it?
No, one of the few markets so far that has taken out those August lows, and I'd rather see meal the leader than oil in here, but hopefully someplace we can catch in here. If we can get a couple of days that we don't put new lows in that bean meal, then I think you get a little bit of buying coming in, maybe put a little bit of fear into the bears in here, but right now they're in control and they're just going to keep pushing until they get punished for doing it.
Yeah, so January's holding the $10 area. Do you think that support's going to hold?
Yeah, a little bit ago we took it out by a little bit.
Okay.
Still $9.95 to $10 in that January. Should be pretty good support. I don't remember. I think that $9.95 is something like 62% retracement of that whole move up. So I'd hope somewhere in here we do it. But I think that the real factor is going to be is, do the funds believe they want to get back, be a lot short here again, or are they going to be content to waver back and forth?
Some of that is going to depend on what happens with the tariff situation, don't you think?
Definitely. And one has to believe that's part of the fear in here. That's why the U.S. dollar's up, that as well as I do. And, that just take the dollar for a second in here. 107.05, I think, was the high in October of 2023. We got really close to that overnight. And I'm not sure there's a lot more to go into that, but there's people have a lot of fears of what President Trump is going to do with tariffs. Hopefully he has he's got different staff this year than he had in his previous administration. Hopefully he gives their thoughts some respect and they can get him to cool off and say, tariffs are one thing, but they should not be used to tell the people how much money you're bringing in, because you also have to look at what you're hurting on the other side of that. Do I think you use it as a tool to get countries to come along to your position? Yes, but I just don't think you slap them on as what I think most people's perception is from what they picked up in the campaign.
All right. Well, let's hope they're just a negotiating tool to get some trade deals or some better stance there. Okay. So what about the wheat market? We've had better weather and rain, better ratings on winter wheat areas. Are we going to be able to hold some of these support areas down at the contract lows in the wheat?
I'm sure hoping we can. We got to pray that we don't follow soybean meal in here and do some of those things. But, wheat, it's not like we're tight just like any of the grains, but I think fundamentally we should find support here on the amounts that we have in those things. But let's just see how the whole thing works in here.
Yeah. What about the cattle market? Obviously, we're off of our intermediate highs here, but we've been holding low. So are we just going to move sideways for a while, you think?
I think that's where we're at. Everybody has in their mind of our perception of we got lower cattle numbers, and we do. But, if we look at last week's kill in the fed cattle market, that's the largest one we've had in a long time. And I think maybe near record beef production for that week, if I remember right. So it's not like we're running out of things. So I think we're more what we're doing a sideways thing. Seasonally, we do get weakness into the mid to late November, and then we start to get some strength building in as we get into December. Hopefully we can do that. But right in here, I don't see any runaways. If we're going to get a push, one has to wonder if that does not wait till February or so before we get that really rolling.
Yeah, you mentioned the ramp up in slaughter, which obviously put pressure on the box beef values last week and in turn the cash. So cash is going to be pretty key this week. We haven't seen a lot. What are you expecting?
I think you would hope maybe we can do steady money in here. Last week it wasn't pretty, but we've been holding well in here. You probably got a better chance at that steady money if you get the futures to hold in here. And each morning they seem to be sideways and then try to go a little higher. We failed yesterday late in the day on that from what we've done, but it just, it doesn't feel like anybody's going to win this thing. It's more of a tug of war than anything.
Yeah. Obviously, the stock market has been helping to provide some support, but you have to wonder how long that's going to last too, don't you?
You do, and I think it's support, but on the stock market side of things, and it's too bad it is this way, but it appears that if the stock market's weak, it's going to affect the cattle market on the weak side much more than it does on the upside. Yes, it's an influence, but we look over the last couple of years when we were kind of doggy in the cattle, waiting for a move in the stock market, putting new highs in, but the cattle didn't. It just seems more of, if it's negative in the stocks, it's going to affect that cattle more than it does on the plus side.
Yeah, that's a good point that you make there. Okay, hog market, we made new contract highs on Tuesday. We did not see new highs yesterday, and we're a little lower to start off this morning. Are the funds ready to get out of this massive long that they have, this record long position?
I think they like it. They've been making money, but I think they're wise enough to know you get to a certain point, enough is enough. And you could be starting to see that. And I think the other part is you look down the road, and let's just take hogs into next July. We got right at that $100 mark a couple of days ago and can't get through it. So I think you got some selling going there from a hedge standpoint. And we talk about the funds, but I think the producers are hedged fairly heavily in here also. So we can unwind some of those, but all in all, I don't see a lot of upside for hogs for the short term.
All right. Thanks so much, as always, Vince. Vince Boddicker with Farmers Trading Company. That is Markets Now.